Are you tired of being on the wrong side of the market? In today's video, we are going to learn how the fair value gap is one of the best trading strategies that will get you funded. So what exactly is a fair value gap? Sounds like an interesting name, doesn't it? A fair value gap is an inefficiency in price caused by a big imbalance between buy orders and sell orders in a given asset or market. A fair value gap is used to snipe entry points. The fair value gap can also be used as a confluence with order blocks, supply and demand zones, divergent strategies, and many more price action concepts. The fair value gap is seen by a formation of 3 candles with increased momentum. It is formed by the first candle's wick, with the third candle's wick separated by the second candle's body. We can mark this zone using a rectangle, and this is our fair value gap. The reason this happens is price gaining strong momentum in one way, not letting the other market participating getting a fair price to enter a trade. The point of a fair value gap is the price will eventually come back to our gap to fill out the imbalance created by institutions, just for price to confirm continuation of the trend afterwards, giving traders a great buying opportunity. We have seen how fair value gaps act for bullish momentum. Now let's learn how to spot bearish fair value gaps. It works in the opposite way of the bullish fair value gaps. We start by having a formation of 3 bearish candles with increased momentum. We take the first candle's lower wick and the third candle's high wick, separated by the second candle's body. And this zone is our fair value gap. Soon in the future, price should come to fill the imbalance or inefficiency created, at which point we have an opportunity to sell short on the trend continuation. Let's take a live example on the chart for both situations. We wait for price to give us indications on what could happen next. Buyers push the market up without giving sellers a fair price, creating this imbalance. This is the first candle's high wick. This is the third candle's low wick. We mark the zone as our fair value gap and wait for price to retest the zone. Here it touches the gap. This means we can look for buys. We look for at least 2 risk to reward ratio and target the previous swing high. And that's it. We hit take profit. Again, we wait price to give us the footprints of what institutions are doing and we follow them afterwards. Here we have a very small wick on the first candle, and this is our third candle. We mark the imbalance zone and wait for price to come back to fill the gap. Price is managed up to hit the fair value gap. We are now looking to sell short. We have different options for the stop loss. We can place it above the previous swing high, or right above the fair value gap, which I chose to place in this specific trade, and let the price run. We have hit TP on a 11 risk to reward trade. If you risk 1% per trade on a prop firm using this setup, you can pass the challenge in 1 trade. These were the basic fundamentals of the fair value gap. It's important to know that trading this alone can make you profitable, but we can increase the quality of the fair value gap setups by using confluences. The first confluence we want to learn is the break of structure, frequently known as the BOS. A break of structure is a smart money concept. Price follows a trend, then consolidates, and then suddenly it breaks the last high or low with increased momentum, confirming a trend reversal. And this is for the bearish break of structure. Let's take a live example on the chart on how to use the break of structure confluence with fair value gap. Have patience, and price will eventually signal clues. We are in a downtrend. This price action in a lower time frame signals a consolidation where institutions are building up positions. Right here, price breaks, structure, warning us the smart money is ready to take the price higher. We clearly see candles have also formed a fair value gap, and knowing that we had a break of structure, It will increase the quality of the setup. We mark the zone and wait for price to eventually come back to fill the imbalance. We place the stop loss right below the imbalance zone, and we look to take profit above the previous swing high, aiming for an 8 risk to reward ratio. Here we have entered the trade on this aggressive candle. We want to see very quick and aggressive reactions on the touch of the imbalance zone. It quickly went to the upside, and we hit take profit. The fair value gap can be used in confluence with many more strategies at the same time. A more advanced way of analyzing is the following. Price slowly moves up, creating this ascending channel as support and resistance, and we should wait for the breakout. The price breaks down the support and gives us clues that we are in a bearish market. And now we mark the following macro fair value gap, in which we know price will turn down from, and we look for a micro fair value gap inside the macro fair value gap. An extra confluence is this break of structure. Now we can delete the macro zones and focus on the micro zones for the entry position. We sell short, with the stop loss right above the gap and the take profit below the last swing low. We entered the trade right here. And that's a win of 4 RR. I find this strategy the easiest to pass prop firms. I risk 1% to 2% in the evaluation phases. I aim to pass within 1 to 3 trades on very selective occasions. I wait for the perfect setup, so patience is very important. On the funded stage, I risk 0.25% to 0.5%. Do not worry if it sounds too little, because one win using this strategy with a risk-to-reward ratio from 3 to even 11, as we have gotten in the video, will quickly add up. I suggest to not aim for more than 5% to 6% in payouts, as your risk increases. What you should look for is capital preservation and accumulation for the long term. This is everything for today. In the next videos, we are going to cover institutional order blocks, ICT silver bullet strategy, the ICT Judas swing, and many more price action strategies helpful to know in becoming a funded trader. And we will also dive deep on other confluences that can be applied to the fair value gap system. So make sure to not miss them by clicking the subscribe button, leave a like if you found this video helpful, and give us feedback in the comments. Thank you for watching, and good luck in the new trading year.